Hey guys, what's going on? It's Rekt Capital. Welcome back to the Rekt Capital channel. Thanks so much for joining me in today's video about the 21 weekly exponential moving average, and we're going to be talking about this EMA through the lens, why is it important and why losing it is important as well. And then we're going to be talking a bit about the 50 weekly EMA and what these two EMAs are doing, also covering a bit of Wyckoff distribution as well. All of these things coming up right now. Subscribe to the channel for more videos like this in the future, and let's dive right into it. You guys are probably already familiar with the 21 weekly exponential moving average. This green moving average, essentially, if we go back to as far as 2012, you can see that once we break back above this EMA, test it as a support in the bull market, we continue to hold this EMA, briefly even lose it like in 2013, but testing it as a support nonetheless. Losing it means we enter a bear market and we reclaim it briefly here, break down from it, test it into resistance and so on. So in any case, a bull market continues to thrive as long as we're keeping this level as a support, and you're probably familiar with that. Losing this and this resistance, this 21 week exponential moving average turns into a resistance, and so on and so on. So at the moment, of course, we had this EMA as a support, and then we've recently lost it as support, and now it turns out that this EMA is now the one to reclaim. We've crashed below it, trying to find some sort of support here, but ultimately this EMA is going to be the one to reclaim. And if we just propagate this EMA into the future just to try and extrapolate where it could go down and potentially figure as a resistance, then we can get a better idea as to where it might be in the next few weeks or so, in the lower 40s, maybe even the 40s. And that's quite interesting, because if we just look at the Wyckoff schematic, you can see that, well, this is the Wyckoff schematic. And if we just zoom out to the weekly, you'll notice that the 21 weekly EMA is a confluent resistance with this last point of supply, this basic area where Bitcoin needs to rally in order to turn this bottom of the distribution range into a resistance. If it does that, then we're going to reject and essentially continue this distribution into phase E. But my thesis overall is that we'll break past this distribution range resistance back into the range and break past the 21 weekly exponential moving average, basically speaking, and test it back into a support. That would be wonderful. That would be great to see, for Bitcoin to break back into it. But you can see how through the Wyckoff distribution lens, you're seeing that there is confluent resistance in this very pivotal area for the next trend, and the 21 weekly exponential moving average is going to figure as that resistance. But let's now talk about the other side of the coin, and that's the 50 EMA right over here, the blue one, the blue EMA. And you can see that over time, keeping this EMA as a support has occurred in bull markets, and you can see that turning it into a support here and keeping it as a support is really important, and even here as well. So really important that whenever this 50-week EMA is turned back into a support, we tend to see the bull market continue. So we're seeing this price action, Bitcoin's price action, hold at the moment. And here's just a very quick overview of how we're keeping this 50 EMA as a support. You can see that over time, it's really holding it perfectly as a support, and that's essentially giving rise to a bull market every time we reclaim this level as a support, even if we just break down from it briefly to an overextension towards the downside. Reclaiming it as a support, and here we are holding this area as a support once again. So really interesting to see how we have these two confluent, or at least these two EMAs, figuring as an important focal point going forward, because we're having this support of the 50-week EMA and we're having this resistance of the 21-week EMA, which is also a confluent resistance with the bottom of the distribution range. which is going to be, we need to see whether that Wyckoff distribution range is confirmed or not. At the moment, it is unconfirmed. So these two EMAs converging to one another, it's essentially sandwiching price in a way that we're going to see some consolidation inside this triangular market structure. We're going to see some consolidation inside this structure, this being the resistance, this being the support, both levels essentially compressing price into a non-volatile state. And we can see coiling into the apex of the structure, but I doubt we're going to coil for that long, to as far as August or even late August. I don't think we're going to coil into the apex of the structure for that long. We could in fact see a trend decision potentially in July, late June, depends on how much we're going to consolidate here, but these are the two levels to watch out for in the next few weeks for this price compression, because price compression here between these two levels is going to precede volatility, and we have to see which level is going to be the more predominant, the stronger one, because I don't think this consolidation will be able to be sustained for a period of a few months. That would be a little bit too long. Coiling and meandering throughout this structure for a few weeks would be healthy, and then we'd have to see some price compression and that major trend decider. But I don't think this consolidation is going to last until August, because we'll probably see a trend decision before then. Really interesting to see how things pan out. This 50-week EMA support, really important. And this 21-week EMA is also quite important, because it's going to be the resistance that essentially dictates to us whether we're going to see a major markdown into phase E through the lens of the Wyckoff distribution schematic, because in my opinion, we're in this phase at the moment. So if we just go back briefly to the graph, we can see that this is currently this phase. We need to see whether this is going to be a confirmed breakdown from the overall distribution range at the moment. That's going to be the major trend decider. And as you can see, confluent resistance here, the 21 weekly exponential moving average, along with the Wyckoff distribution range, the bottom of it, confluent resistance area. Let's see how that area continues to figure as a resistance, or will it break back in? Will Bitcoin break back into the range just to turn it back into a support and invalidate this distribution range altogether? This is the market structure to watch out for in the short term over the coming days and potentially a few weeks. But overall, this is going to be the market structure that is encapsulating Bitcoin's price action in, through these EMAs. These EMAs are essentially compressing price, and this will be also the market structure to watch out for the coming weeks. In any case, guys, that's about it for today's video update. I hope you enjoyed the video. Subscribe to the channel for more videos like this in the future, and of course, like the video if you enjoyed it to see more content like this going forward. I hope you're having a fantastic day. I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.